Hi everyone, I'm Dale Smith, aka Journo Dale, and we're here to talk about Canadian politics. There is a lot of talk about interest rates and inflation right now, especially this last week after the Bank of Canada raised the overnight rate 50 basis points. So interest rates are now at 1%, which is still historically very, very low, but a lot of people are freaking out that this is going to cause affordability issues and so on. At the same time, they're also really concerned about inflation and the rising cost of living. And so I figured I'd try and break down some of what's going on. I've talked about this in some of my columns, but figured why not also do this in this particular format, and hopefully we can try and break through some of what's the narratives are out there right now, because they're not all necessarily accurate. So first of all, with regard to the Bank of Canada and the interest rates, what the bank has to generally do is look and forecast about 2 years down the road where they think inflation is going to be, because that's basically the time frame by which an interest rate hike will or cut will reverberate through the entire economic system. It's usually an 18-month to 2-year window by which things work their way through. So that's kind of the time frame that they're looking at, which is why there are no real quick fixes to the current situation around inflation. As to why they didn't do this sooner was a combination of different factors, some of which was the fact that they had to wind down some of the pandemic programs they had, as well as to change the forward guidance that they'd previously offered, where they were going to keep rates lower for longer, because that was kind of what they anticipated the economic situation vis-a-vis the pandemic being. The recovery was faster than most people anticipated, largely because of government measures, as well as the measures that the Bank of Canada did in order to ensure there was liquidity in the system. And this is partially where we get a lot of this talk about, printing money, which didn't actually happen. The Bank of Canada did engage in quantitative easing, which some people say is printing money, but it's not really. There are differences. The Bank of Canada has this explainer on their website about why it's different. But their narrative is out there that they printed all this money to fuel government debt, which is not really true, but it's one of these kind of pervasive narratives that's out there, based on a more elementary understanding about monetary policy. And it's also one of these things we need to remember as well, that we did see deflation early in the pandemic, and that could have spiraled into an economic depression if it was allowed to continue, because when people have to cut prices, they can't pay their debts. Businesses foreclose, the cycle just spirals downward. And they really wanted to avoid that, which is partially why they did have expansionary or monetary policy early on. Was it too much? I mean, that's always hindsight being 2020. But at the time, that was definitely the consideration, and there was an actual danger there. So that's kind of the monetary policy side of what's going on. But inflation is being driven by a number of other factors right now. And we don't hear a lot of talk about it for a number of different reasons, partially because we're getting a lot of media outlets that are just both sidesing the narratives out there. And when you have one particular group and a few loud voices saying it's because the government was printing money, well, no, but they're not really dispelling this either. So with that in mind, I've got the Consumer Price Index from Statistics Canada, which goes through what the drivers of inflation are. For much of the pandemic, a lot of this has been around supply chain issues. And what that means is that because we've got integrated global supply chains, you need, in order to manufacture something here, you need components that are manufactured over there. And if you can't get them in time, then you can't build the things. And one of the most common of these shortages has been semiconductor chips. This has been plaguing the economic supply chain for months now, and that is a big reason why, for example, cars have become so expensive. They can't get semiconductor chips for cars, so they can't build enough, which means there's a supply shortage, which means the prices go up, and that's contributing to inflation. So that's a lot of what has been talking about when it comes to things like supply chains. We can't get the stuff we need into our market fast enough, and then there's problems with not enough shipping containers, and they're all in the wrong kinds of places, and it's a big mess, and they're trying to sort it out globally, but it's taking a lot longer than they had initially assumed, which is one of the reasons why inflation has been a little more persistent than the initial transitory notions that were out there. It's also, we have to remember as well that we are moving from a phase of what they called COVID inflation into conflict inflation, because the invasion of Ukraine by Russia has also caused a lot of problems within the global economy that is being felt through inflation. Part of that is fuel, part of that is food, and we'll kind of get to that when we kind of look at the individual drivers. So one of the things to remember is the price of gasoline is a huge driver for what we're seeing in inflation, and most of that is coming out of the world oil price. So one of the things we need to remember is around supply and demand. So in the before times, there was so much oil production going on that prices were driven right down. And then the pandemic happened and nobody was driving and there was too much supply, so a whole bunch of places just shuttered their production. And then when we started opening back up again, it takes longer to restart oil production than other things, and so there wasn't enough supply in the system. So that's just making prices go up. And then you had some countries like China who had fuel shortages. And these were for other kinds of fuels, things like coal and so on that they needed for power plants or certain manufacturing. And when they had those shortages, they started using oil and gas instead and burning that as a replacement fuel. So that takes more of that supply out of the global market, and then the prices go up again. And now, thanks to the issue with Russia and Ukraine, they are trying to keep Russian supply out of the market, which means the other supply that's left in the global market is again being constrained even further, so prices will go up even more. So that's another reason why the invasion of Ukraine is having an impact on inflation. So after gasoline, one of the other drivers has been food costs. And there's a number of different factors here. One of them is during the pandemic, we had supply chain issues with food, but we also had it around things like meat packing or food processing. And what that largely meant was we had all these big meat packing plants that became COVID hotspots, and they lost tons of employees that were either out sick or in some cases died. And that had a big impact on supply. Again, there's less going out, and therefore prices are went up. That was part of it. But the other thing is also we had a lot of droughts in food producing regions in the last year or so, and Canada was no exception. We had a really bad drought on the prairies last summer, and wheat production in Canada was down 38.5%. And that's really a big deal. And this is another reason why prices started going up, was because there was less availability of grain stocks in the Canadian market, elsewhere as well. And so again, prices go up because there's not enough supply. And this is another place where the invasion of Ukraine is having an impact on food prices, because Ukraine is essentially the breadbasket of Europe. It's got lots of agricultural land, and they actually didn't suffer a drought in the last year, but they can't get all of their stocks to market because normally they'd use the Black Sea, but those ports are being barricaded, or like as in Mariupol, they're being basically decimated. So that again is constraining the global supply, which is driving prices up, which is contributing to inflation. And then the final big driver in Canada for inflation is housing. It's housing, but it's not so much housing supplies and real estate. It has to do with things like replacement costs. And a lot of that is around things like renovations, as well as construction and housing stocks and so on. But again, we're seeing supply chain issues, things like pipes or countertops, and a big driver is actually appliances. We can't get enough appliances into the market, which means prices again go up. Lumber is also a big deal. It's another supply and demand issue. There's not enough lumber supply in the market right now because of big demand for housing starts, particularly in the US. And so again, prices go up because there's not enough supply in the system. And that's another persistent driver of inflation for the last year or so. So these are things we need to look at when it comes to why the prices are going up. And this is one of the things that's kind of frustrating for me, who tracks these things and who reports on them, is because I'm reading these numbers and I'm seeing what's going on, and then these issues come up in places like Question Period or in the media, and nobody wants to talk about what the drivers are. The government will give some bromides about, isn't it great that we're combating cost of living with things like childcare, which is great, but it's not addressing the issues that are being the main drivers. And then we've got other people saying, well, it's because you printed too much money. It's like, no, it's because you have these specific factors. And if the Bank of Canada didn't engage in quantitative easing, it would have no bearing on any of these drivers. Same as with increasing interest rates. That's not going to have, that might have an impact on things like cooling the housing market a little bit, but it's not going to have an impact on the world price of oil or droughts or supply chain issues. So what's driving the inflation isn't going to be necessarily responsive to the Bank of Canada raising interest rates, which is one of the few tools they have when it comes to monetary policy. But that's kind of where the situation is. And so when we're talking about this, we need to be fairly clear-eyed in what those drivers are. And that will help us to understand why things are rising the way they are, and things to think about when it comes to how we as consumers kind of work around that. Which can be difficult, particularly if it's things like food. But if we understand where the price increases are coming from, then it helps us to combat some of the irrational anger, but also just to know where the pressure points are so that we can maybe, in our political awareness, try and focus on those. So that's kind of where things are at, and why things are the way they are right now. And that's everything for this week. Join us again next week for some more Canadian politics. I'm Dale Smith. That's at Journo_Dale on Twitter. And don't forget to like the video, share, subscribe, and support us on Patreon. Thanks, everyone.